Hello. Clostridium difficile, or CDI for short, is a serious infectious disease that sickens more than 400,000 people in the US every year. It is the leading cause of hospital-acquired infections and is responsible for over 20,000 deaths on average every year. CDI strives when an imbalance of what is called the microbiome within the large intestine occurs.
In your intestine are trillions of bacteria that are really part of you. You don't have a colon without your trillions of bacteria. It can't function. So when you kill those off, even if you kill off C. diff, you leave yourself open for reinfection with that and other bacteria and other medical conditions. What we do as Seres is we replace and reconstitute that, so you now have a normal organ again, your microbiome.
The human microbiome comprises of all the bacteria that live both within and on the human body.
The human body is made up of an estimated 30 trillion cells, but it's also home to around 39 trillion bacteria. Together with fungi and viruses, they form a vast community called the microbiome. The largest and most diverse population of bacteria are found in the gut, with thousands of different types inside our intestines. These microbes may be tiny, but they play a huge role in our health. They help train the immune system so it knows what to eliminate or ignore.
Seres Therapeutics is one step away from commercializing a first microbiome therapeutic drug that could help prevent CDI recurrences in patients who have contracted this lethal disease or are at a heightened risk. With FDA breakthrough status designation and the serious possibility that their first drug will be commercialized this year, the company and its value could go nuclear in 2021. Stick around, you cannot afford to be in the dark on this stock. Keep it simple. Please note, I am not a financial advisor, so everything within this video is for entertainment only. No more plugging. Let's start drilling. Seres Therapeutics, ticker symbol MCRB, has a current market cap of under $2 billion. It was founded a little over 10 years ago and went public via its IPO in June 2015. They are a clinical stage biotech company with a pipeline of 6 microbiome therapeutic drugs in various stages from phase 1 to phase 3 trials right now. Microbiome tech is a new type of medication using natural bacteria as a therapy. The one in the most advanced stage of clinical trials being SCR-109, which is their therapeutic bacterial drug for the prevention of recurrent CDI disease. CDI is not a nice disease to acquire, and you shouldn't wish this on anyone. It results in diarrhea, abdominal pains, fever, and nausea, and in the worst case can cause death. There are over 450,000 cases of C. diff in the US every year, with close to half of those being recurring situations, and the estimated monetary burden is $5 billion in healthcare. That is simply no small market. On August 2020, Seres released their top-line results for their SCR-109 phase 3 EcoSpore 3 study. The highlight is the efficacy results substantially exceeded the FDA guidance. On this news, the stock literally went to another level into another solar system and went from $4 to an intraday high of $33, which is a staggering 725% upsurge, before closing that day back down at $22, but it's still a meteoric rise of 450%. The very next day, Seres announces a 10.5 million share public offering, which is a very sensible move, but clearly planned to raise capital. The stock did not fall below $20 again, and instead gradually uptrended to a high of $38 in mid-November. Since then, we have seen a gradual sell-off with a couple of rebounds, and today it's trading around the $19 to $20 range. September 2020, Seres released information that they had approached the FDA for their plans to submit a BLA, Biologics License Application, for SCR-109. The comment from the FDA is they need at least 300 patient data to pass the safety database requirements. Now you may ask, why did Seres not enroll 300 or more patients to conduct their phase 3 trials in the first place? That would be a good question, but we are where we are. Seres confirmed they are now conducting an open label study both in the US and in Canada, so the required results should be forthcoming very soon. Although they do not give a target date, I do sense the urgency in their statement. Let's briefly touch on their next most advanced drug, which is SCR-287, which is their drug for the treatment of ulcerative colitis, which has an even bigger market market potential than C. diff. There are over 700,000 occurrences of this disease in the US every year. Similar to C. diff, this disease causes inflammation of the colon and rectum, resulting in abdominal pain, bowel urgency, and diarrhea. The phase 1b results were successful. Its phase 2b top-line results are expected in 2021, and SCR-287 has already gained FDA Fast Track designation. Once these results come out in mid-2021, could we potentially see another massive pop like we did for SCR-109? Only time will tell. 2020 was a game-changing year for Seres Therapeutics and their drug trials. March the 2nd, Seres releases their fourth quarter and full year 2020 results. Being a late-stage clinical biotech, we aren't looking for massive revenues, but one thing we do note is they have a much healthier cash balance of $300+ million, partly due to the dilution we saw in August, and we saw the increased number of common shares going from 56 million to 79 million. The giant corporation that is Nestle has partnered with Seres since 2016 for a reported $120 million deal to help develop and commercialize its pipeline of drugs, including SCR-109, SCR-287, and the phase 1 drug SCR-301.
What does this mean for Nestle? They wanted to work with us. We wanted to launch this drug in the US ourselves. We can do that. Orphan disease, I've done it before in HIV. But we did a deal with Nestle Health Sciences for the rest of the world. We believe that this drug is for every patient around the world with C. diff. Working with Nestle Health Sciences, they have the global reach. They have the ability to get to every patient in a rapid but safe manner. That's our goal.
The deal that was inked in 2016 will give Nestle's Health Science Division exclusive rights to sell Seres treatments outside the US and Canada. Nestle's payments to Seres could reach up to $1.9 billion after factoring royalty and milestone installments over the next 15 years. These estimates were made back in 2016 that I think could be underestimated as we move forwards. With Nestle's global reach, I think this partnership will steer Seres to new heights once SCR-109 receives the BLA from the FDA. If the market potential of SCR-109 and SCR-287 were not strong enough to form a bullish thesis, then know this: Seres has, according to Nasdaq.com, an institutional ownership of 94.5%. Yes, 94.5%. This is absolutely insane. There are some heavyweights here, including BlackRock with a 6.9% stake, Nestle Health Sciences with an 8.8% stake in the company, but clearly the most eyebrow-raising is ARK has over a 15% stake in the whole company. We can see this in the ARK Genomics ETF, and as you would expect with a position at 41 and portfolio weighting of 0.64%. But it doesn't end there. Seres is also within the ARK Innovation portfolio with a position of 46, and also like ARKG has a 0.64% weighting. Maybe that's just luck of the day. For stocks to appear in ARK and another one of the ARK ETFs is a very strong indicator that ARK believes the company has game-changing innovation and explosive exponential growth potential. To summarize, the current price of Seres at around $20 is, in my opinion, a great opportunity to buy in for an explosive exponential pop. We are expecting a mid-2021 top-line result for SCR-287 and a possible end-of-year biologics license application submission for SCR-109. Factor in the huge institutional interest. I believe the stock has only one direction it can go, and that is to the skies and beyond. The potential for microbiome therapy is possibly as big as genomics today, with more and more research being done in this field.
Research has shown that certain good bacteria are more common in the guts of some cancer patients who responded to immunotherapy. Scientists now want to see if changing a patient's microbiome might boost the effects of treatment. But exactly how these vibrant communities might influence cancer and the immune system remains a mystery.
I believe that in the run-up to the anticipated top-line results of SCR-287, Seres will regain $30 with some ease. Once the results are released, I think it could literally pop and 2x to around $50 to $60. But the main course is towards the end of the year, and if they can submit the BLA to the FDA and get FDA approval to commercialize their first ever microbiome drug being SCR-109, then oh me oh my.
Round for Vince Carter.
Oh, it did not. It's over, ladies and gentlemen.
I honestly think that will be the game changer and result in a 5x explosion, meaning they will be hitting triple digits. Thank you for watching, and please take my analysis with precaution. Do your own due diligence and speak to a professional before you look to invest any of your money. If you are interested in EEPG stocks that I have in my Freedom portfolio, please check out my other videos. For more huge growth stock picks, analysis and updates, please stay tuned and consider subscribing to my channel so you get the information first. I am the Simple Trader. I try to keep this simple and will simply see you next time.